The passing of the One Big Beautiful Bill Act has affected all of us taxpayers, and especially when it comes to federal employees. Today, I wanted to talk about some of the highlights of what those tax law changes are for federal employees and talk about some of the things that you should be aware of in order to help you make better decisions when it comes to tax planning. Hi, I'm Christian with Plan Your Federal Retirement, and let's get started. So the exciting thing for me as a financial advisor, and we're talking about taxes, is this tax law was something that we were thinking would happen, but it just wasn't made permanent yet. And what I mean by that, the previous tax laws that we had, the Tax Cuts and Jobs Act that started from 2018, had a sunset date at the end of 2025. And that temporarily reduced the tax brackets, the marginal tax brackets for all taxpayers. And what the previous tax law said was at the end of 2025, tax brackets, marginal tax brackets, were going to go back to what they were back in 2017 and before, unless there was some new law that was passed. Well, here, this is that new law that was passed. It makes the current tax laws that we have from the Tax Cuts and Jobs Act, it makes them permanent so that they're not going up starting in 2026. So what do I mean by that? The 12% tax bracket was going to go back to the 15% tax bracket. The 22% tax bracket was going to be the 25% tax bracket. The 24 was going to be the 28. And those are the main tax brackets I deal with for federal employees, but it's not exhaustive. So as you can see, had this tax law, the One Big Beautiful Bill Act, not been passed, taxes would have been going up for everybody. So it's good news that this was passed. Now, the other thing to be aware of is the standard deduction amount for 2025 has increased. So it was going to be $15,000 per filer, but now it's $15,750. So if you're married, $15,750 times 2, it's now $31,500 for the year instead of what it was going to be, which was $30,000, which is kind of nice. A new exciting change for the One Big Beautiful Bill Act is the new Senior Bonus Deduction. How the Senior Bonus Deduction works is if you are 65 or older in the current tax law, you get an additional $6,000 that you get to deduct on top of that standard deduction here between 2025 and 2028 tax years. This is a per spouse benefit. So if you're single, it's $6,000. If you're married, then it's going to apply to each spouse that's 65 or older. So a potential extra deduction of $12,000 if both you and your spouse are 65 or older. There are phase outs with the senior bonus deduction, and that would be if you're single, $75,000 would begin the phase out for that senior bonus deduction. If you're a married filing joint, then it's going to be $150,000 before that senior bonus deduction starts to be reduced. Continuing on with some deduction changes is the increased SALT tax deduction, SALT being the acronym State and Local Taxes Deduction. So for those who itemize their taxes, not taking the standard deduction, but they itemize their taxes, one of the options or one of the itemizations that we have is for state and local taxes. Previously, before this One Big Beautiful Bill Act change, you could deduct up to $10,000 for state and local taxes. Well, what are those state and local taxes? That includes your property taxes, but it also includes your state income taxes that you have as well, state and local income taxes. Some states don't have state income taxes. So part of the SALT tax deduction is you could, instead of deducting that state income tax, you could deduct state sales tax instead. So what the cap has now been raised from $10,000 is $40,000. Now, this might not affect all federal employees, but if you are on the cusp of potentially taking the standard deduction or itemizing your deductions, this might push you above to be able to itemize your deductions this year. I'd say this would probably be more for those federal employees or federal retirees who are under the 65 mark, so that you're not getting that senior bonus deduction, because you don't get the senior bonus deduction if you itemize your taxes. But increasing it from 10 to 40, that might push somebody over, especially if they're in a state that has state income taxes, that might push them into itemizing their taxes this year. This increase in the SALT tax is only going to be through the end of 2029. So by 2030, it's supposed to go back down to that $10,000 threshold. Some of the news surrounding the One Big Beautiful Bill Act was the no tax on tips, no tax on overtime. So both of these have been incorporated into the law, not fully 100% tax-free, but especially for those federal employees that do have overtime, we do now get that no tax on overtime. That income for those that have that overtime pay would be $12,500 that you could exclude from your taxes if you're single, or it's $25,000 if you're married filing joint, that for overtime pay that you can exclude from your taxes for overtime pay. The phase outs for this no tax on overtime pay would be $150,000 if you're single, or $300,000 if you're married filing joint, before that deduction starts to get phased out. One last change on this One Big Beautiful Bill Act that I think will affect a lot of federal employees have to do with charitable contributions, and specifically charitable deductions for those non-itemizers who aren't going to be itemizing their taxes this year. This law affects 2026 and beyond, so it does not apply here in 2025, but starting in 2026, you as a single individual can deduct an additional $1,000 of charitable contributions, cash donations to a IRS recognized, 501c3 organization. And it's $2,000 if you're married filing joint that you can deduct for your charitable contributions on top of the, standard deduction, on top of the senior bonus deduction. So it's all good news all around for those who are charitably minded. Now, of course, today's list of tax law changes is not exhaustive. There's a lot more that has changed for business owners. There's a lot more that's changed for foreign income and all sorts of things there. The document was over 870 pages long. So what I did was I took some of the highlights that I thought would be most relevant and most applicable to federal employees and federal retirees. Now, if you have questions related to this, or if you found another change that I did not mention in today's video, feel free to leave your question or comment below in our comment section. Make sure you are subscribed to our channel so you get our latest videos and content that we put out. And of course, until next time, happy planning.